All I have to say is go Target, go! For those of you who've been watching along, and Billy, I know you call it Kmart, there's a little bit of vindication when I see Target having a good day. Anyway, today I'm going to talk about Target. I'm also going to tell you what stock I sold in my set it and forget it account and why, along with the things that I bought, as go over some other things that surprised me about the market today. Stick around, it should be a really great video. Hello, my YouTube friends. My name is Adam Kahn, and this is Dividend Retirement. Now, I'm probably going to end up posting the same video in two places because I do want the people who watch my Investing with Adam K to see the video, because a lot of you have been following around for a while and kind of probably laugh a bit about my Target jokes, and they are jokes. Like, I do think it's kind of funny, but I do have a little bit of vindication as I've been watching the stock drift higher, mainly because I've been touting it for a while, and the reality is I still think it's cheap where it's trading today. Target has been the equivalent of my previous pick with Boeing, that it just seems so oversold and so out of favor that eventually, when it's not in the news, I feel like that lifts and allows it to start going higher. I've actually been watching Starbucks that kind of feels the same way. I just have a tougher time with the valuation, and I probably have a little bit too big of a position to be able to see it clearly. But from my perspective, I don't know if that's the right word, but from my perspective, I feel like Target really is still really undervalued. I took a quick look. Now, it doesn't include today's move, but it's still only trading at about a 12 times valuation, which is super cheap. I mean, they're doing just fine and things are chugging along and they make plenty of money. Now, the dividend has fallen as the price goes up, which makes sense. The higher the price, the lower the dividend payment. And it's now like 4.3%, if I remember properly. But they're only using 56% of their free cash flow to be able to pay that dividend, which means it's super secure. Those are the things that I really love about Target. And I think until it gets around maybe 130, possibly even $140 a share, is when I have a tough time saying it's a little bit more reasonably valued. It's about where I would expect it to be. But that doesn't mean I don't think it will go higher from there. I do think there's a lot of upside potential in Target. And what I try to do is I compare it to things like Walmart, right? I mean, they're pretty similar. And we could argue that Walmart's probably a better company. But Walmart is trading at 41 times value. So it's very tough for me when Walmart is not growing at a faster pace, not doing anything much better. Their dividend is a lot smaller. Now it only uses like 36 free cash flow. Forgive me, I got distracted by a phone call. Anyway, so Walmart, that's trading at like a 41 times valuation, and they pay like somewhere, I think it's between 1 and 2% for their dividend, using I think 35 times or 35% of their free cash flow. So while it's super secure, it is a much smaller dividend at a way higher valuation. And as much as somebody might like Walmart better, is it really worth 3 times the value of Target, which is essentially where it's trading? That's partly what I really like about Target. It's not that I think it's the greatest company. What I'm looking for in these deep discounted things are companies that I think are good companies at really good valuations. PayPal might fit into that category. The problem with PayPal is it's just like, it's not really in the news, so I don't see a bunch of negative sentiment. It's just kind of died and sitting there, which makes it a lot tougher for me. What I like to see is what I talk about sometimes, which is bad news on good companies. It was a lot of bad news on Target, the same way that there was bad news on Starbucks and as well as there was bad news on Boeing. Recently, I kind of feel like that's the case with Adobe and some of the others. I just don't know the space so well to really dive into it the same way. I did buy a tiny bit of Adobe. I don't really pay attention to it because it's such a small position, but it's for the same reasons. I feel like it's a good company that's had a lot of bad sentiment. Actually, so has CRM. The problem for me with CRM is we use it in my office, and I get it because it's very hard for me to see where the value is. It doesn't make sense that somebody like Microsoft or somebody else wouldn't be able to come along and just do the same type of business without having additional charges of what you already pay for Microsoft. Anyway, I have been very surprised at the market today. With the way that the metals reacted, along with the way that Bitcoin reacted this weekend, I really expected to see a much bigger drawdown on the stock market, which tells me it doesn't matter. Bitcoin could probably go to zero and it not impact the market at this point. They're probably two different things. Now, maybe it starts to draw it down. Of course, Michael Saylor would be really upset, as well as probably Coinbase and some of these others that probably have investments in Bitcoin. But it shows to me that the market really shrugged it off. Most things saw it as a buying opportunity. And if you look at something like QQQM, it's actually having a decent day today after all those horrific things happening this weekend and really making it look like other things would come down, because I really saw a scenario where metals could come down, it would pull Bitcoin down, and then the money drawing out of the system from those two things could then push into the stock market, which then could go into the housing. But the fact that they didn't even react to it kind of tells me that it doesn't matter. It's frivolous play money that nobody's really invested enough that it's going to impact much, which is a great thing. Because what I'm really hoping is to see the markets continue to chug along. I'm going to get off topic a bit, but it reminds me of the conversation that my son and I had yesterday. I said to him, since he's 15 years old, he hopes for a stock market crash. Why? So he could buy things at a cheaper level. Me being 54 years old, well, this year I will be, I don't hope for a correction. Why? Because my time is limited for when I actually want to be in the things for retirement, which is why I'm doing the channel of Dividend Retirement, because that's what we're looking to rotate into, which I'll talk about that stock that I sold. But at my age, I'm not looking or hoping for a big correction because my timeline is a lot smaller. It's why I always talk about my real goal of the channels and doing the YouTube. One is to give me something to do and keep me busy and keep my brain active. Like, I don't think anybody really wants to just sit on their ass and do nothing. But I do want to have control of my time. I like doing the videos because it gives me an outlet and it keeps my brain working, gives me something to pay attention to and strive for. And hopefully I connect with a few people that get some value from these things that I talk about. One being that save and invest for your future. You know, one of the things they do in Singapore that I was talking to my buddy Steve about is they have a forced savings that is for people's retirement. You can't touch it unless you're using it to buy a house. But 20% of the income that you make at your job goes right into an account that is a retirement account. It is not Social Security. It is your money that you get able to see. You're able to pick different options of what you want it invested in. And I think people would be a lot less disenfranchised or upset about their own money going into their own accounts that way versus it coming out and going into Social Security, which they have no control of and feel like it's just one more thing that the government takes from. I like that Singapore does that. And if I could encourage people to just automatically take from their checks and put it into account to save for their future, then it doesn't really matter if the markets go up or down. At least you have some money put away to save for retirement. Like, that's my goal. Now, as always, I'm going to do my little asterisk thing here. This is not financial advice. Please do not listen to me. I am not a financial advisor. I am just a guy on YouTube sharing the information of what I think and the things that have worked for me. You really need to do your own research when it comes to investing, so please reach out to your own financial advisor, do your own research, and don't listen to guys like me. Now, I got a very nice comment about that last week. I appreciate it. I hope that there's some tidbits of wisdom. And like I said, I was very surprised. I expected a big drawdown. I am happy to see that it wasn't. And what did I sell in my set it and forget it account? So today I sold Caterpillar, and I added on to my Kenvue position, which is going to end up being Kimberly-Clark. And I also added on to the position that I started in Clorox. And why did I do that? Well, my account is comprised of maybe 30 different tickers. And I have a bunch that I think are kind of growth and risk on, and I don't have anything that's real crazy, and this is the set it and forget it where a majority of the funds go. But what I do have is Meta, Amazon, Google, things like that that are in my quote-unquote risk stuff. It's not things like AppLovin or anything. I do have a small amount of Oklo, But understand, for the size of the portfolio, it was a very small investment. It just got very lucky, which is actually collapsing today. But I don't pay attention. I got out of enough of it that I've paid for the entire investment. I put some money in my pocket, and if it goes to zero, that's okay. I even shorted, I think, one or two calls for 2 years out at like a $260 strike price, and I got paid more for those calls than I bought the stock at. Like, really wild tight anyway. But I tend not to do that because I find that you lose money when you make those really crazy, stupid bets. I do think Oklo is interesting because I'm watching it fall while Liberty goes higher, and it's very interesting to watch one shoot up. Possibly the people who are in the administration might have taken their profits, and now it seems like it's rotating into the other one. Just something I'm noticing. Anyway, totally off topic. So, why did I sell Caterpillar and why did I buy the others? Well, Caterpillar was part of the portfolio that was supposed to be a little bit less risky, a little bit more of a secure investment that might be protective of the account. But the way that it's gone parabolic, I don't feel that's how it's behaving. And I wanted it to just be this boring stock that paid a small dividend and maybe drifted higher 5% a year or so. And the fact that it's gone up so much and the way that it has, I have concerns that it could go down the same way. Now, Caterpillar is a great stock, which is why it was good timing that I said, don't listen to me and do your own research. I have nothing against Caterpillar. The fact that it moved the way that it did, and it's getting put in the hyperscalers, is because they're building out the data centers and they're going to have this huge revenue. I worry that that could be for a limited amount of time, and when it falls off, the stock price could drop too. It also wouldn't surprise me if the stock dropped 10 or 20%, and it does it in big moves. So I was more comfortable moving that money that was supposed to be the safe investment, that's in the stuff that's defense type of investing, the Ken views that I moved it into, that I wanted to get it out of the risk side of things and move it into big boring stuff. So I don't know. What do you guys think? Should I just have left it alone? I mean, it is a set it and forget it account, and I try not to pay attention to most of it. The thing that I'm actually struggling with is the Meta and the Googles and the Amazons that have gone up as much as they have. Like, my mindset when I bought them is if they go to 1 million, oh, I'll just be really fortunate and that would be great. But they've grown enough that it's beginning to get to the point that I feel like that's why I want to rotate and move into the dividend stuff, to where I just have the dividend checks coming in and I don't have to pay attention so much or worry about these investments. Maybe since it's a new year, I know we're a month into it, it might be a good opportunity that I'll go through the set it and forget it account again. For those of you who are interested, if you are, just put a comment in the comment section. I won't get into the dollar amounts. I just don't think it's appropriate, but I don't mind talking about the percentages. And part of why I say that about Meta is I've already sold, 30% of the position I originally had, and I want to say it's probably 8% of the portfolio as well. So it's just grown into a rather large position, and maybe it's time to rotate out of that stuff into big old boring things. Like, I did learn that MLPA is a way of having like some of those midstream type of investments, and you don't get a K1, you get a regular dividend. Now, I'm sure you're giving up a little bit of money, but the only problems with that I have with like Hess Midstream and MPLX and some of the others is it's going to drive my accountant nuts if I picked up some of those dividenders. So MPLA was something that I just noticed might be a good thing to have to get a little bit of a dividend. It's not going to move a whole ton, so I don't expect to really have much growth with it. But anyway, it pays, I think, a 7% dividend. Interesting option. Anybody have any opinion on MPLA? Anyway, Tuesday, 11 o'clock tomorrow. Don't forget, I'm going to do the live. I hope you guys can make it. It will be on the Investing with Adam K, just because so far I lost 5% of my subscribers on the new channel and dropped from 18 to 17, which I hate to admit. I'm actually excited that I already have 17. I expect it to take a few years before I have some followers. I just I don't know. I just wanted to see how it goes starting a new channel and seeing like whatever. It'll take some time. I'm still excited to I like the I like starting things. I like the process, so it's okay to me to start over again. And like I said, it gives me something to do. As much as I want to be retired, nobody just wants to sit around and do nothing. Anyway, do me a favor. If it's the new channel, by all means, hit the like and subscribe button. If it's the old one, really. And if you don't, you don't, even on the new one. Hopefully, you got some enjoyment from it. Remember, tomorrow, anybody who can make it, it would be great. 11 o'clock on the live. I enjoy the banter back and forth. Joe, I apologize that you didn't see the markets tumble today. Hopefully, you had some good trades. I know you have a good amount in cash. And just in general, I think it's good to be defensive all the time. I kind of wonder if this weekend just had me a little too worried because the markets have performed great and seem like they're still chugging along. Anyway, have a great Monday. I will see those of you who can make it tomorrow, and I'll talk to you soon. Bye bye. Oh, before I forget, I'm not going to put those little emojis and stuff. I'm going to go get my hair cut, so I don't really have time. I'm just going to download the video, and I'll probably do the God, my brain. I'm so old. I'll probably just do the closed captions and that's it. And maybe I do a quick video to the regular channel to try to get people to watch on the other one.